What's up, guys? Elbows Up Crusader here, because there is yet another crisis for the Carney administration. The Canada Post strike this time is very, very different and might end in a way that nobody saw coming. But after I show you that, I'm going to talk very briefly about the current state of finances in Canada and how to better position yourself. As always, I show you exactly what just happened and I give you the news that actually matters.
All right, stop me if you've heard this one before. Canada Post workers are on strike again. Now, they feel like they've been forced into this position after the federal government says major changes are needed at the Crown Corporation, notably ending door-to-door deliveries. So far, the feds don't look like they will intervene. As Jobs Minister Patty Hajdu said, she's encouraging both parties to continue to work towards a resolution in their ongoing labor dispute. Now, over the past year, the federal government has used back-to-work legislation to end other disputes, like strikes by the rail workers and Air Canada flight attendants. So how could this latest walkout impact the federal government's politically?
The people, small businesses, and evidently even the Carney administration are all tired of Canada Post and are also all actively looking for solutions. With many ordinary Canadian citizens praying that Canada Post either gets shut down or fully privatized, many more are actually hoping that the trigger-happy Carney administration does not bail out Canada Post this time with all of our tax dollars. But how did we get here? This is now the second strike that Canada Post has done in less than a full year. And that's all because they are struggling to make ends meet and are addicted to federal funding. Ultimately, they're struggling because they aren't operating like a business, but rather like some government handout organization that relies on tax dollars rather than business efficiency. Like even Carney is saying that Canada Post is not viable or sustainable as an organization. Let's take a look.
Canada Post is part of our country. It's part of our fabric. Canadians rely on Canada Post. And it's the responsibility of the government, first and foremost, the responsibility of Canada Post as a corporation, the unions in Canada Post, to make sure that Canada Post as an organization is viable. A company is not viable, any organization not viable, if it has cost $5 billion over the course of the last decade, if it's losing $10 million a day, which is what Canada Post currently is doing. So some significant changes are needed to be made. I would refer to the Kaplan report. It's in the public domain, which goes through a number of suggestions for those changes. The corporation is moving forward. The government has indicated the corporation should move forward with some changes that are the start of a path towards viability. More will need to be done. The corporation, in consultation with the unions or in discussions with the union, negotiations with the union, can be part of that solution. Other steps will need to be taken. But Jeremy, to your core of your question, yes, Canada Post, Canadians rely on Canada Post, and the responsibility of the government, the corporation, the union, is to put Canada Post in a position that trust of Canadians in the corporation is delivered.
Bleeding over $10 million a day every day is not a sign of a healthy business model, but rather a business model that is addicted to cheap government loans and subsidies, and a business that is plagued by ridiculous bureaucracies. Because this time they are striking because they're upset about the lack of funds and the potential for restructuring. But unfortunately for them, said restructuring is on its way. Let's take a look.
Announced yesterday.
When we talk about restructuring, we're talking about the loss of jobs. How many jobs are we expecting?
I won't sugarcoat it. The government should have, I thought, been a little bit more transparent there. When they say they're going to save money, and that's what they're trying to do, fully understood, because they're losing so much money. But Canada Post, again from the audit annual report, reports about 75% of their annual costs are wages. So if you're talking about reducing costs, closing, door-to-door delivery, ending door-to-door delivery to the 25% that still get it, you're talking about reducing headcount. You're talking about reducing people. And I'm not talking a couple of hundred. They have the same head count of 65,000 employees that they had back in 2006 when they were when they were much, much, much larger. And so to answer your question, Lindsay, they're going to have to lay off eventually thousands and thousands of workers, because it's not, the CEO said this last year. He says, we're unsustainable. We've got way too many people relative to the demand for postal services.
You know, the government is like a huge HR department when they use words like restructuring or new vision or something like that when they want to fire you. Because the Carney administration has been signaling for some time that they want to restructure the hell out of Canada Post, which the earlier professor of business analysis correctly explained that it means thousands of Canada Post jobs being let go. But let's talk about the opportunity here. With Canada Post rightly going away, restructuring, likely ending door-to-door service in major urban centers like Toronto, Vancouver, Montreal, are Canadian entrepreneurs ready to answer the call of duty? Because apparently 2 Canadian startups say yes. Let's take a look.
You do us a favor and tell me why you're here today.
Yeah, absolutely. Thanks for having us, Ben. And we're here for a simple reason. We've built 2 incredible tech companies, started right here in Canada, because we believe that supply chain and logistics has been done in such an archaic way for many, many years. I am a giant fan of what ChitChats has been building. And at Trexity, we've been doing this for just about 7 years now. And we decided to build a platform, a technology platform that would enable any local retailer, business, small business, large business, enterprise business to move packages faster than they could have ever imagined, truly own their customers' doorsteps in a very intimate way, own their customers' data, don't offload to a marketplace, and not having to depend on legacy supply chain platforms that don't do their business justice. Okay. And we've been able to scale this across Canada, working with entrepreneurs, small business, large business. And over those years, we caught the attention, and they caught our attention as well as ChitChats, and they're doing some incredible work as well.
Okay, so let's ask Julie, tell us about ChitChats.
Sure. So we've been around since 2001. Our founder, Derek Nolan, he actually took matters right into his own hands. He drove packages across the border into the US and dropped them off at the post office himself. He was frustrated with the high shipping costs, and he saw there was a need. And soon his truck, his little green station wagon, was full, and he was taking all his other friends, and other people were clamoring to get onto his truck to take the packages across. So now today, ChitChats is a full shipping platform. We help and support Canadian entrepreneurs across Canada to save money on postage and make shipping easier. We enable them, as Alok said, to help them continue their business. We provide them innovative platform tools that allow them to directly integrate with their e-commerce platforms like Shopify, Etsy, and WooCommerce. And basically, retailers just drop off their packages at one of our locations or schedule a pickup, and then we handle the rest, from customs paperwork and to getting the packages to the final carrier.
There are Canadian private companies that are doing a 10 times better job than Canada Post, that are more efficient, cheaper, and have way better customer service. As a result of all this chaos, I will almost guarantee they will take up a huge market share to meet the demand of Canadians all over this country. Because ultimately, private Canadian small businesses will always do better jobs than ancient dinosaur relics like Canada Post. Finally, some real capitalism is actually on its way. But before that real capitalism, I want to show you how you can better position your finances in the current ever-changing financial makeup of Canada. And as always, this is not financial advice. Always do your own research, and let's take a look at the stream. Now, what you're looking at here is a chart showing 2 metrics. Number 1 in red is the Bitcoin price, which we can safely ignore. Number 2 in green is the global M2 money supply. What this is showing is how much cash are the global central banks releasing into the market, how much cash is available in the market currently. Because as you know, these banks, they can either restrict, release, lubricate, or accelerate the economy based on how much cash they're able to release or restrict. When they are looking to release a lot of cash, especially in times of lowering interest rates, the M2 money supply would be going up like you're seeing right here. And it's not only going up, it's going literally vertical. This comes at a time where in Canada, our housing market is currently not necessarily collapsing, but it is correcting. We've seen housing prices drop across the board about 10%. Condo prices on certain areas in Toronto, like where I am, have been dropping 30% in some places. Now, this is not really a collapse. It's a very hefty correction. To be honest, it was meant to be. But what this tells us is that there is a changing financial situation in Canada. And that's actually what is also causing Canada Post to be forced to be restructured. Yes, it's also because of years and years of liberal ideological destruction of this country, but ultimately it also leads to the ever-changing financial makeup of Canada, moving from some type of quasi-socialist and now being forced into some type of quasi-capitalist society and economy. Now, this guy I'm about to show you kind of succinctly explains has happened to the Canadian housing market and how it relates to our cousins in Australia as well as New Zealand. Let's take a look.
Both countries ran the same experiment that Australia's still running. Mass migration, credit-fueled mania, and zero productivity. But they're just 18 months ahead of us. Canada built a housing market on immigration, debt, and fake scarcity. When interest rates rose, it collapsed like a fucking wet tent. House prices fell over 20% and foreign ownership got banned, but the damage was already done. And even now, even with the rate cuts, the market's not bouncing. Why? Because Canadians are over-leveraged, underpaid, and sick of being treated like tenants in their own country. How does that compare? Well, New Zealand tried the same playbook, different accent. They banned foreign buyers back in 2018, but it didn't matter because prices soared during COVID, peaked in 21, and now they've tanked over 20% as well. Kiwis got burned and they don't want back in. Rents are unaffordable, builders are vanishing, and confidence is fucking gone. Finished.
Sorry for the language. I kind of forgot that he was a bit of a colorful guy. Now, what he's explaining is that basically what we are experiencing today in Canada has happened and is happening in New Zealand as well as Australia. So this is not necessarily only because of liberalism or wokeism. It is also because of ever-changing international finances. Don't get me wrong, I'm a conservative. I don't really like the left, but just for the sake of the truth, it's not all blame can be placed on them too. Now, what can we do with this information? We know that interest rates are on a trajectory to keep going down. We know that housing prices are now dropping, meaning that when housing was a equity that you could hold that would protect you against inflation and rocky economies, now that is kind of changing. And when the M2 money supply is skyrocketing, but you're seeing housing drop, that says that cash does not see housing as a viable assets anymore. Now, if we look at the chart, we actually see more I guess you could say traditionally risky assets like Bitcoin perfectly follows the M2 money supply except for recently. And the reason why it's not following is because this money supply, all this liquidity is being soaked up somewhere else. Where is it being soaked up, you may ask? Right here. This is gold. Let me just adjust this so you can see what it looks like. This is gold, okay? Each candle here is worth 1 day's worth of information. It has gone quite literally vertical, completely vertical. From January to today, so January 2025 to today, any mutual fund that may have been focused on gold or any type of precious metals has been up 78% from January just to today. This super vertical pump is very similar to this vertical pump you see here at the M2 money supply, which tells me that the markets don't really want to go into crypto. They don't want to go into housing. They are trying to go into hard assets like gold and even like silver, which right now is pumping quite hard. That's just a very brief, very surface level analysis on something that just happened literally 2 hours ago, because the central banks are now pumping all the M2 money supply charts everywhere. In future videos, I'm going to go a lot more in depth on finance because that is my background. And I'm going to do a much deeper dive on how to position your capital in a Canadian economy, in a, shall I say, ever-changing Canadian economy. But that being said, what do you think about all of this? Is Canada Post restructuring only an issue of liberalism, wokeism, or is it also sensitive to the ever-changing financial economy of the world? And also, how are things in your neck of the wood? You're likely watching this from a different part of the country or even different part of the continent. How's the economy over there? What are you seeing? I want to see what you're seeing. I want to see what you're thinking. And as always, don't forget to like, subscribe, because I will see you on the next one.